Hey folks, welcome back to T2SMC Trader. I wish that everyone had a good weekend. I'm here for the weekly analysis video as I'm not doing this for a long time. I guess this is the perfect time or right time to make the weekly analysis video. So just take a few moments to watch it and don't forget to leave a like. If you are new, don't forget to subscribe to our channel. Before doing everything, I love to open the calendar so that I can get the information about the coming week news. For that, I love to use Forex Factory calendar. If you love to use any other calendar, you are good to go. By Forex Factory, I can see that we have CPI in Wednesday and Thursday we have PPI. So I believe Tuesday and Thursday will be the best price action in coming week. Monday and Friday we don't have any kind of news, nothing, no news. Okay, no medium impact news, no red impact news. So it's gonna be weird price action over there. Tuesday we have some impact, medium impact news. We'll see how it is going to work. As we have CPI in Wednesday, I believe Monday and Tuesday will make the liquidity for CPI, and then Wednesday will take that liquidity, will leave some liquidity for PPI in Thursday. So this is how I'm going to plan the next week, and I believe that this week the narrative will work its role. Okay, it will play its role actually. So let's go to the price action or the chart. First, I would love to use this dollar index so that I can have an idea how the dollar index is going to work. In dollar index, all you can see that market has taken all of this buy side liquidity, this relatively equal highs, that relatively equal highs, and finally this high has been taken out. It has also been taken that high. Okay? Also traded that bearish fair value gap little bit, took that high, made the relatively equal highs or the obvious liquidity. Right now market is here and trading this weekly bullish fair value gap. If you see closely over here, you will see that market has traded the 50% of that weekly bullish fair value gap. Also, I have this highest up close body close candle which has traded this bearish fair value gap. At the same time, it has made a order block because this candle has closed below this up close body close candle over here. This candle opened, traded until the opening of that bearish order block, also reacting from the constant enforcement. Right, it is in range bound between this order block and that bullish fair value gap. To be honest, I believe that market will be bearish and it will fall little more, at least little more, but obviously it can keep going higher by using this bullish fair value gap, and it can take that obvious liquidity before falling. So that is also in my mind. But if you ask me what I want to see, I want to see this order block reaction will send the price little lower, okay, little more lower, at least until this bullish fair value gap over here, and then if it wants to go higher or lower, we'll look about that, okay, later. Right now I'm expecting this order block will hold the price and send it little lower, at least until this bullish fair value gap. Let's go to the daily chart. So over here I have this daily chart, and this is that weekly bullish fair value gap. As you can see, the candle respecting this constant encroachment from the weekly chart and also from the daily chart as well, except this candle has closed a little lower of that constant encroachment, otherwise it was perfectly perfect. Okay, at the same time, if you look over here for that daily bullish fair value gap, I'm just going to remove this weekly bullish fair value gap. Instead, I'm gonna keep this daily bullish fair value gap, which is called the entry fair value gap from the daily chart. I have this last fair value gap over here. I have this weekly daily bullish entry fair value gap. I have this bearish fair value gap. Market is respecting that bearish fair value gap perfectly. Also, I had this inversion fair value gap. I just removed it from my chart as I have this bearish fair value gap, and which is absolutely perfectly holding this price. I want to see market will go a little higher. It will take that buy side liquidity or relatively equal highs before falling. Because this bullish fair value gap is holding the price, I want to see the reaction will send the price little higher, and it will take this buy side liquidity first, then it will fall and it will break through this daily entry fair value gap, and it will work with this last fair value gap. That is my intention to see. But if I see market closed above here around this area, then I'll look for this buy side liquidity, which is the obvious liquidity from both daily chart and the weekly chart. As you can see, this high has been taken over here by a shallow run, which is my obvious liquidity. So by seeing the candle close, I will decide, is it going for that buy side liquidity, or is it coming and going through this fair value gap, reaching for this breakaway gap or the last fair value gap. So it will depend on the candle close. If you ask me, as I told, I'm extremely bearish. I want to see market will go a little higher, then it will fall, and it will go through this fair value gap, and it will work with this bullish fair value gap. That is my intention to see. I will just remove my bias, or I will change my bias if I see there is a bullish fair value gap and very big run toward that buy side liquidity. In that case, I will change my bias and I will go for that buy side liquidity, and finally this fair value gap from the daily chart, which is the last fair value gap as well from the daily chart. I will expect that market will reach until this daily last fair value gap. So we'll see how it is going to work around this area. Let's go to 4-hour chart. If you come to this 4-hour chart, as you can see here, nothing is hindsight. All I have outlined beforehand in live streaming. This is kind of weekly fair value gap where we have two gaps. There is one gap, there is another gap. So I just marked both of the gap by one fair value gap. Okay, so from here, that low to that high, this is that volume balance, or kind of the new week opening gap. This is the same new week opening gap here. This candle close and this candle open. Okay, so here is the volume balance as well. Right now, market has traded this bearish fair value gap from the 4-hour chart, went lower, took that liquidity the way we have outlined it. It has done the same thing, trade that bullish fair value gap from the daily chart around this area. At the same time, it has traded this fair value gap from 4-hour chart. Now it is willing to show me that maybe market is going for that relatively equal highs over there, and then it will come back again and it will take this recent obvious liquidity. This low has been taken over here by a shallow run, and then after taking this buy side liquidity, trading this new week opening gap one more time, it will fall for this sell side liquidity. What else can happen? It can simply respect this fair value gap and it will keep falling. It is also possible for this fair value gap or that fair value gap, which is the last fair value gap and the entry fair value gap from the 4-hour chart. This is also possible. So everything is depending for the CPI. Around the CPI, the run is going to tell me what should I plan for the next time. Until CPI, I will keep watching the market. In the meantime, maybe I will do some scalp, as I'm coming every day for the live streaming. So you'll see how it is going to work. But right now, my first intention is market will go higher and it will take that buy side liquidity. It will trade this fair value gap one more time, and then it will fall and will go through this the bullish fair value gap for any of this gap. So this is my intention to see right now. Okay. If you go to the hourly chart, the same thing over here. This is that relatively equal highs. Market has traded this bullish fair value gap, also take that relatively equal lows after clearing all the sell side liquidity. This is a very nice run, perfectly respecting this volume balance or the new week opening gap. Can it use this candle as an order block and go higher for this buy side liquidity? So this is my intention. It is fully like this type of plan. This is the plan for me. Okay, so this is how this market is going to work. This is my intention to see. But at the same time, what else can happen after trading or taking this buy side liquidity? It can keep going higher for this buy side liquidity. It all will depend again after the CPI. Okay, or what else can happen? Market will never come for this buy side liquidity. Instead, it will fall and it will go for the. But you remember the fair value gap I keep talking from the 4-hour chart. It will go for that fair value gap. It is also possible. I really don't want to see this. Instead, I would love to see it will go first for this buy side liquidity, and then it will go for the sell side liquidity, which is the relatively equal loss, and for the fair value gap around here, around that area. Okay, this is the whole plan for the dollar index. I know it's gonna be a little confusing, but don't get confused. If you watch it one more time, it will be perfectly clear to all of you. So make sure that you have understand everything, whatever I told. These are all the possibilities, and I'm just assuming what can happen. My intention to see, I have already explained that as well, that this is my intention, but what else can happen? So let's go to the Nasdaq now. I want to go for the Nasdaq. So there is the Nasdaq, and as you can see, this Nasdaq has taken the all-time high by that last week. It has taken that all-time high. When market went for the all-time high, how did it went over there? This is that weekly bullish fair value gap. Market has traded that weekly bullish fair value gap. Lowest down close body close candle, which is the order block. It has traded that weekly order block, went higher, made this propulsion block. So I want to see even if it would love to go more higher. And where exactly I'm focusing, we'll see that when I'll be in daily chart. Before even going to that level, it will come back again to trade that weekly propulsion block, or maybe until the min threshold of that propulsion block. So I want to see some kind of lower run first, then the higher run again. So I'm not interested to see that this week market will open and keep going higher. I don't want to see that. I want to see from Monday and Tuesday market will fall first, then by using CPI it will keep going higher. That is my first intention to see. In the meantime, what else can happen? It will just open, keep going higher. It is also possible because market is at the all-time high right now, so it can keep going higher. There is no problem. According to the price action, I want to see some kind of reaction, and that reaction, I mean not reaction, actually retracement, at least to that propulsion block min threshold, until the min threshold or like opening of that weekly propulsion block. I want to see some kind of bear run by Monday and Tuesday. So Monday and Tuesday, where will be the accumulation, and the manipulation will trade the propulsion block or the min threshold of that propulsion block. Then expansion, which is actually the CPI, by Wednesday it will go higher and it will go for the buy side liquidity. If it doesn't do that, instead what else can happen? It will work, accumulation will work here, manipulation will be to the upper side, then the CPI will send the price lower for that propulsion block, then PPI will start to go higher again. This is also possible. So anything I will get in Monday and Tuesday, whatever the manipulation will I get, CPI will be the opposite expansion. So manipulation higher, CPI will go lower. Manipulation lower, CPI will go higher. Something like that in one word. Let's go to the daily chart. So this is the daily chart. All you can see from here, all of you already know if you are with me for the for our live streaming. Finally, we have got that minus 1.5 standard deviation, minus 2.5 standard deviation. Market went through this minus 1.5 standard deviation, used that minus 1.5 standard deviation as a support, not exactly, not so precisely, but it was very near to that minus 1.5 standard deviation. When I will be in a lower time frame, you will see that it has worked that as a support, came until the 50% between this minus 1.5 standard deviation and minus 2.5 standard deviation. This is the 50%. So in my live streaming, I told that if this candle failed to close above that dotted line, then this dotted line will hold the price and send it lower little bit to trade any of this fair value gap, either this one or that one, before going higher until this 2.5 standard deviation. As you can see, this candle failed to close above that dotted line. It is not hindsight. I have marked all of them long before even market reach any of this level. Okay, so right now I'm expecting the reaction from that 50% of that range, from there to until any of this level. And this line is that weekly propulsion block. As you can see, this is that whole propulsion block from the the daily chart, weekly chart. This is the whole propulsion block. In daily chart, this is that lowest down close body close candle which has traded this entry fair value gap, which is my order block. This candle has validated this order block. Then next candle open, trade the order block and the min threshold. After trading the min threshold and order block, boom, market went higher. There is that unfilled fair value gap. I really want to see that market will fill this unfilled fair value gap to make a breaker block again. So that is my intention to see by Monday and Tuesday. I want to see some kind of accumulation and manipulation toward the lower portion. Then by using CPI, it will go higher. What else can happen? By Monday and Tuesday, market will make accumulation and higher manipulation. By using that CPI, market will fall for this unfilled fair value gap to fill it. Okay, just to fill it, which is around the 50% of that weekly propulsion block. Again, guys, it's gonna be little confusing, but if you watch it two more time or one more time, I believe that it's gonna be 100% clear to all of you. All I want to see, this 50% will send the price lower. How it is going to happen? For getting that clear information, I need to wait to see the price action by Monday and Tuesday, and then CPI will give me the run I'm expecting. At the end of the day or week, I want to see this minus 2.5 standard deviation. So this is my next level that is gonna be traded before a long fall. Okay, even if it wants to fall, give me a long fall, then it has to trade this minus 2.5 standard deviation. That is my intention. If it can go through this minus 2.5 standard deviation, we have another standard deviation. We'll talk about that after went through this minus 2.5 standard deviation. So I believe that this is clear to all of you from the daily chart. If it doesn't happen like that way, we will see the live price action by our live streaming, and I believe that you are getting day by day the clear idea how to trade in that specific area. Okay, I'm going to go to the hourly chart. So this is the hourly chart, and as you can see, now don't focus all of these lines because they are the propulsion block line, then all other line from the daily chart and the weekly chart and the standard deviation line. Okay, this is that dotted line. Market came until this dotted line, consolidating. That means it is refusing to go higher. Instead, it has started to consolidate over here. If you look over here, this is that relatively equal lows. Also, this is a trend line liquidity. I really don't like to use this trend line liquidity, but that is too clean trend line. Can you see this low, and that low? What a perfect trend line liquidity. I don't want to see this trend line liquidity is going to work and market will keep going higher, because in that type of situation, all of these people will be profitable. I don't want them to be profitable, to be honest, as I'm an ICT trader. I'm not a retail trader. So I don't want to see they are going to be profitable. Here, there is an hourly fair value gap, which is the only fair value gap which should be traded. Okay, so market didn't trade any of this hourly fair value gap. In my opinion, this is the random reversal. I don't like the random reversal, as it is in the all-time high. It is happening, but in the meantime, at the same time, I want to see it will fall now, at least for this hourly bullish fair value gap. So if it fall here, I'll be very happy to catch that sell now. In my opinion, it should fall, keep falling now. But in the meantime, if I see something around the CPI that market is going higher before reaching here, I'll start to look for that minus 2.5 standard deviation. Otherwise, to be honest, I want to see market will keep falling. It will take that that trend line liquidity, and then it will fall for this hourly bullish fair value gap. So this is my first priority right now, to think about the market. I want to see it will keep falling for this hourly bullish fair value gap. Last but not least, come here to that 15-minute chart, and from the 15-minute chart, as you can see, this low and that low, they are the relatively equal lows, which is the sell side liquidity. I have this trend line liquidity as well. What a clean trend line liquidity, though I don't like to mark them, but as it was so clean, I just marked them. Okay, this is that bullish fair value gap from the hourly chart. I want to see market will fall and it will take that hourly bullish fair value gap. So far, market has traded that dotted line perfectly. It has traded, as you can see from the daily chart, nobody closed above the dotted line. I want to see it will keep falling, though this is the perfect reaction from that constant encroachment. As it is the perfect reaction from that constant encroachment of that entry fair value gap, I'm not convinced that market is keep going higher, because this is so perfect. Even if it wants to keep going higher, it should tap to the high or to the low before going higher. So my intention to see that, can market fall at least for this fair value gap, then for this liquidity, trend line liquidity, also I have this obvious liquidity, and finally I have that relatively equal lows and this fair value gap. If CPI, before CPI market keep doing this type of accumulation, then do some kind of manipulation, then around CPI I will target that sell side liquidity, and this sell side liquidity by CPI news and this bullish fair value gap. By the CPI news, if market keep going higher and closed around somewhere here by CPI, okay, then I'll keep looking for this line. I will target that line. So this is my higher time frame dotted line, which is the 50% of that to standard deviation, which should hold the price and send it little lower, at least for those type of liquidity. We will all see how it is going to react or how it is going to work. In the meantime, if you see over here from the, this is the mini S&P and this is the Nasdaq. This high, that high, they are the same high. Market has taken that high, which is called the SMT. So this high has failed to taken over here. So I got this SMT over there, over here, and as you can see, this high has taken over there. So this is a perfect SMT right now, and I want to see this SMT is going to work and send the market lower. From the mini S&P, this low and that low, they're clean lows or perfect lows, which is actually this relatively equal lows. Okay, so it is going to work the same way. I believe that both mini S&P and Nasdaq will go for the sell side liquidity by using CPI, or before CPI it will go for that sell side liquidity. So before CPI, if it can take that those sell side liquidity, which is low probability, but still if it can take those sell side liquidity, I'll start to look for the buy run for the CPI. If before CPI market doesn't take that sell side liquidity for both mini S&P and Nasdaq, then by using CPI, I'll expect that market will go for those sell side liquidity and it will trade that hourly bullish parallel gap. So that is all for this week, the plan. But again, brother, this is just my assumption and it can be changed by the new week opening gap. There can be 100 handle opening gap, new week opening gap. Okay, nobody knows how the market is going to open around Sunday. So everything can be changed by the new week opening gap. It's if it is a huge opening gap. In that type of situation, maybe I will change my mind and we will see how the price is going to work this week. Otherwise, I'm expecting the perfect accumulation, manipulation, then expansion, continuation of the expansion, and Friday reset. So narrative is going to work perfectly this week. That is my opinion. Everything is predetermined. I believe that though we don't know the enigma, but we can guess what is going to happen. So this is how I'm going to plan for this week. Do your own analysis, get your own confidence. We will see how it is going to work. So until the next time, cheers guys.